Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So we got to talk about the price of silver today because it looks like tomorrow we may see some significant price movement to the upside. Now, of course, short term nothing's guaranteed, but I'm going to tell you in this live stream why I believe we could see a significant breakout in the silver price as early as tomorrow morning. Now, first of all, we got the chart pulled up here. You can see we are in the midst of a significant uptrend in silver. Dates back to March. And we've been in a kind of a consolidation pattern. However, recently silver broke out of this bull flag consolidation. And so now the big question is just kind of like, when is the rally really going to take place? When are we going to get up to, say, 34, 35 bucks, the next leg on this journey upward? Well, again, based on some testimony that we got from Powell today in front of Congress, some of the commentary he made, and some data that is set to be released tomorrow, I think we might not be waiting much longer for that. And of course, you want to get into some physical metal. I mean, we're looking at a chart of the paper price right now. You want to get some physical metal, check out sdbullion.com. There's a link down in the description. That's where I buy my gold and silver right now. They got kilo bars on sale. They've got peace dollars on sale if you want to get a piece of history. And very likely, I think this stuff will be priced higher tomorrow. Not financial advice, but check them out. All right, so first of all, why tomorrow? Well, we're getting the June CPI data. It's going to be released tomorrow at 8:30 a.m., as you can see on the schedule from the Bureau of Labor Statistics. And in light of what Powell said today, which is this, that could be very significant. So Powell said in congressional testimony today that the Fed will not wait to cut interest rates until inflation rate drops back to 2%. This is the quote. He said, "You don't want to wait until inflation gets all the way back down to 2%. If you waited that long, you probably waited too long because inflation will be moving downward and could go well below 2%, which we don't want." Of course, the Fed wants to debase the currency at 2%. They've been exceeding that goal quite significantly. It's an understatement, I think, over the past couple years, but this is a very dovish statement from Powell. And if you look at the calendar here from MarketWatch, the expectation tomorrow is that the year-over-year CPI is going to be 3.1%. Last month, it was 3.3%. The core expected to be 3.4%. And what I'm saying here is that if we get anything in line with expectations or potentially even lower, so if we get anything other than hotter than expected inflation, it's very likely that the metals are going to move significantly to the upside, because what Powell's telling us here is that the Fed needs to cut, and I don't think it has anything to do with a fear of inflation falling too far. I think it has something to do with the fact that the economy is being utterly destroyed by the elevated interest rates that the Fed has imposed. And we'll take a look at some data which kind of illustrates that pretty nicely. But one thing I do want to examine is the miners, because today they put on a pretty significant gain. You can see maybe it's the commentary from the Fed, maybe it's just technical buying, but the miners today, silver relatively flat, but these guys are breaking out to the upside, and I think silver could very well follow along. And gold up today as well. Everything I'm saying here that goes for silver goes for gold, except that I think silver is going to move even more than gold because it's so much cheaper, right? Gold is already near all-time highs. Silver is still quite a way away from its all-time highs. But look at this data. This is from wallethub.com. This is an analysis they performed on credit card delinquency among consumers. So you want to understand why the Fed is going to be cutting sooner than expected, or sooner than 2% return to inflation or return to 2% inflation. It's because the Fed can't wait until inflation gets down to 2% to cut, because the economy is going to implode. So just look at this. This is the worst cities for credit card delinquencies, and there's a map of it here. Chula Vista, California. Change in average number of credit card trade lines delinquent between Q1 of 2024 versus Q1 2023, 84%. Madison, Wisconsin, 83%. Garland, Texas, 83%. I mean, you can just look at this chart. It's a huge increase in credit card delinquencies between Q1 2024 and Q1 2023. Even if you go down to the bottom of the list here, you're talking about an increase in Des Moines, Iowa of 19%. That's the best on the list here in terms of the increases. So a huge spike in credit card delinquency. Consumers have racked up record high credit card debt. And, of course, it's not just consumers. This is just one illustration of the decline in the state of the economy. You've also got this here from Reuters today, U.S. regional banks to face increased scrutiny as commercial real estate exposure stifles buybacks. So this is another aspect of the economy that is coming under a huge amount of pressure. The regional banks, analysts here stating that losses from commercial real estate are on the rise, putting a tremendous amount of pressure on these banks. The Fed, in their stress test last month, projected that total loan losses for banks could reach up to $571 billion under a severe scenario. Now, what you have to understand is that, everything that the Fed does in terms of stress tests, forecasts, analyzing, everything is done with rose-colored glasses. So if they're telling you that you could see losses up to $571 billion, then the reality is much worse. And of course, the Fed needs to avert that crisis. How will they do it? Well, they'll cut rates. Now, I suspect we may need to see a brewing economic crisis before the Fed really gets in here and intervenes. But when you understand that there's this huge amount of losses sloshing around in the regional banks, and consumers are already showing signs of being completely tapped out, that's probably not that far away, right? Analysts at Jefferies wrote acute commercial real estate pressures and ongoing credit card normalization are driving losses higher in 2024 for the banks. CRE property prices continued to decline at the end of the first quarter, albeit at a slower pace. According to a Morgan Stanley report, prices fell 3%. That's on the valuation of the properties. Meanwhile, distressed CRE sales increased to 3.9% of the total CRE sales at the end of the first quarter, the highest share since the end of 2015. So we're at the highest rate of distressed CRE sales in almost a decade. And let's see, what else? This is a chart of stock performance of major regional banks year to date. You can see that New York Community Bank Corp there has lost a tremendous amount of value due to commercial real estate exposure. But look at the rest of the banks. They haven't really priced in any of these losses yet. So again, it just shows you that we have a long way to fall, if you ask me. Of course, supporting the continued uptrend in silver is the fundamental data. This is a new report from the Silver Institute we have not looked at yet on the channel, but it's very telling. So this is silver supply and demand, and you can see that they have data for 2024 here, forecast. That's why there's an F next to the number here. But last year, we had a significant deficit in silver. You can see that that's been running for 4 years. If you examine this line here, back since 2021, the silver market has been in a significant state of deficit, and we are on track for a greater deficit than last year. However, very notably, when you factor in the net investment in ETPs, that's exchange-traded products similar to the SLV ETF, the deficit adjusted for ETP will rise this year. The forecast is from 142 million ounces last year to 265 million ounces this year. That's a big increase. The ETPs set to buy silver this year. Last year they were drawing it down to the tune of about 42 million ounces. They're forecast to buy another 50 million. So that means that net deficit, 265 million ounces. Keep in mind, annual global silver production is about 1 billion ounces. So that's a huge chunk relative to what the globe is producing, consuming about 25% more than what is being produced. So the available above ground supply of physical silver is being drawn down. No wonder we are in an uptrend. And also, this is the newest report from the Shanghai Gold Exchange, which reveals silver deliveries in China are absolutely enormous right now. Pull out the calculator here because these are listed in kilograms, but just in June, the amount of silver delivery at the Shanghai Gold Exchange, 1.851 million kilograms. If we do the math on that, there's 32.15 troy ounces to a kilogram. That's about 59 million troy ounces of silver delivered just last month. The accumulative total for 2024 thus far is over 13 million kilograms. So, I mean, this gives you an idea of where all the silver's going, right? You multiply that by 32.15, it's almost 419 million ounces of silver that have been delivered thus far in 2024. So, look, they're taking a huge amount of delivery in silver in China. It's largely for industrial demand, I would suspect. I mean, you know, I'm open to hearing theories. You can put them in the chat or leave a comment down below if you have an idea of why China is taking these massive silver deliveries. But, you know, all we have to do is look at just what the COMEX is sitting on. If you believe their numbers, the CME Group, this is their most recent data on silver warehouse stocks. The delivery in China was almost, in June, 60 million ounces. That's almost equivalent to the total amount of registered silver that the COMEX has. They've got about 69, well, call it 70 million ounces in their warehouses of registered silver. But think about this. They're taking delivery of over 50 million ounces every month in China. So, you know, you can see how there is a setup here for a physical squeeze, a short squeeze in silver. And silver's already up, I think, around 30% year to date. So, you know, we've seen some big moves. However, I think that what we've seen thus far is going to pale in comparison to what is coming. And I've got one other story to share with you today I thought was interesting. This is from the South China Morning Post, and that is that China is now launching its first platinum and palladium futures contracts, not through the Shanghai Gold Exchange. This one's going to be through the Guangzhou, if I'm saying that right, futures exchange. But this is a sign that, you know, the East, the Global South, the BRICS nations, whatever you want to call them, they're taking more control over the trading of commodities like gold, silver, palladium, platinum. And, you know, it's no shock that the price differences between the Shanghai Gold Exchange and Western exchanges is somewhat significant. Now, platinum and palladium are... These contracts haven't launched yet. They haven't announced a date, but this is going to be coming soon. And, you know, a lot of people talk about the manipulation that goes on at the LME, the LBMA, the COMEX, the CME, these Western exchanges. Well, you can see that as more and more of the trading shifts away from these Western-based centers of commerce, the ability of any manipulators to hold down the price, well, it's going to decline significantly. And to the extent that there are non-manipulated markets internationally, that sets up the opportunity for arbitrage and a reduction in any manipulators or shorts' ability to suppress the price. And we're going to see more and more of this as time goes on. So I think it's a good time to get into positions in physical metal especially. You might also examine some of the miners here. This is the SILJ Amplify Junior Silver Miner ETF, not affiliated with them in any way, but you know, these are the sort of products that I think might be worth looking at. Not financial advice, just sharing with you my thoughts. But let me know what you think in the chat and down in the comments below if you're watching this later. Are we being set up for a significant silver rally tomorrow? What do you think the impact of the inflation data is going to be? I think that if it's on target, if we get what the forecast is, you know, 3.4% in core CPI year over year, 3.1 in the CPI, then it's very likely we'll see some movement in gold and silver. But if we get a cool inflation number, well, that's going to mean you know, a huge rally, I think, in gold and silver. You never know with these short-term moves, but I think probabilities are in favor of silver moving to the positive tomorrow. Again, let me know what you think in the comments down below. Don't forget to smash that like button, subscribe to the channel if you have not already, and I will catch you next time. Stay safe and happy stacking, everybody. Smart